Bitcoin, okay? And I would say Bitcoin is like online gold, okay? It's like online gold. That's what I like to think of it as, okay? And in some other instances and where Bitcoin has helped very much, there was a woman, and she was an Afghani woman. Her name was Parisa Ahmadi, okay? Ahmadi, I think I spelt it. If I spelt it wrong, I'm sorry, Parisa. But basically, she was an Afghani woman, and she wanted to make some money for her family. And in her town, I don't know if it was the whole country, but her town specifically, she wasn't allowed to have a bank account. And having Bitcoin, basically, she was working for a company that paid out in Bitcoin. Okay, it was an online blogging site that she attended and learned about creating an online business, and the company paid her out in Bitcoin because she wasn't allowed to have a bank account. But because of Bitcoin, she was able to raise money by working hard, learning online blogging, as she was able to raise money for her family in Bitcoin. So Bitcoin plays its role in countries that have unstable governments, okay, unstable governments, untrustworthy banks, and also, okay, and untrustworthy banks and unstable currencies. Okay, that's a big one. Okay. My fiance is from Russia. Russia has the Russian ruble, and right now it's kind of unstable. So a lot of people seek Bitcoin as a store of value. Okay, so unstable currencies. All right, so this is where Bitcoin helps. Unstable governments, untrustworthy banks, unstable currencies. Bitcoin is a store of value, and it's an appreciating asset, or a deflationary currency, meaning it goes up in value, and I'll show you why, okay? So basically, Bitcoin is online gold, okay? It has to be mined, right? It has to be mined, and what that means is computers are validating transactions. When I send you a Bitcoin, you send me a Bitcoin, there's computers that are validating those transactions and making sure that, I really sent you X amount of Bitcoin. And then, so basically, let me draw it out for you, okay? I'm going to kind of draw it out. Let's just pretend this is the blockchain, okay? This will be the blockchain. We'll just draw blocks with kind of chains attached. I'm doing my best here. So let's just say this is the blockchain, okay? And this is going to be, a new block is going to be placed here, okay? And these, let's just say, this is me, and this is you. And I send you a transaction, right? And you accept the transaction. So there's two lines of data. There's two lines of data right there. And what this is called is, this is a hash. Okay, and it's just a big number of values. Okay, it's just say 1, X, Z, 8, 2, 3. It's just a long number, basically saying that I sent you this amount of money and you accepted this amount of money. So now what the computers do, what the miners do, and we'll just pretend these are computers. Okay, these are computers. Whatever computer decides to mine this, validate this transaction first, will get paid out by the Bitcoin network, and I'll show you why. Okay, so let's just pretend this computer decided to got to this transaction. It solved some math puzzles, right? And now it's validating this transaction. Okay, so now there's those two hashes are being mined by the computer, okay? So let's just pretend like now that's there. The computer is mining the transaction, it's hashing it. It's basically using power, electricity, to close the hashes, okay? And form a new block, okay? So once it validates our transaction, it puts it into the blockchain, okay? And this is a ledger, right? I sent money from, it'll say our wallet addresses, or, you know, I sent 1ZXY sent 2 Bitcoin to 123ZZ, okay? And that's the data that's stored in the blockchain, okay? And because this computer used electricity and power, right? The Bitcoin network is going to reward this computer randomly. It's going to reward random computers that are solving transactions and mining with Bitcoin, okay? And it pays out, let's just say it's going to pay out, 1 Bitcoin, okay? 1 Bitcoin. So that gives miners, people with computers and hash power, it gives them incentive to continue to mine, right? Because they're getting paid out in Bitcoin. They're getting paid out. So, so this is basically how it works. Computers use this algorithm called SHA-256, okay, SHA-256, okay, to mine Bitcoin, or to mine Bitcoin, validate transactions, and put them into the blockchain, and they get paid out in Bitcoin, okay? I know it's a lot to take in right now. I'm trying to keep it as simple as possible by drawing it out, but that's basically all you need to know. We can dive deeper into this in later videos, but basically, there's only going to ever be 21 million Bitcoin, okay? 21 million. 21 million Bitcoin ever mined, okay? And the last one is projected to be mined in the year 2140, okay? And every 10 minutes, 12.5 Bitcoin are released to the network, okay? And they are paid out to miners. They're released into the network by being paid out. 12.5 Bitcoins, okay? And every 4 years, the network pays out half the amount, okay? So in 2020 or 2021, the network will only pay out, 6.25 Bitcoin every 10 minutes, okay? So the mining difficulty gets harder, okay? Because there's big companies like Genesis Mining, which we'll talk about later, that are mining Bitcoin with these supercomputers. And, how does the network keep these supercomputers from mining it all at once? Well, the Bitcoin difficulty, the mining difficulty, gets harder as time goes by, okay? And as the price goes up. So, there being only 21 million Bitcoin makes this coin, okay, makes this currency a scarce asset, and that's very important because the Federal Reserve, okay, of the United States, the Fed Reserve, and if you're not in the U.S., then here's a little bit of education about the Fed Reserve. The Fed Reserve, Janet Yellen, the chairwoman, can print out as much dollar bills as she wants, okay, to keep in circulation, okay, and that's called inflation. That's inflationary currency. So the currency is going to be less valuable. A dollar now will be less valuable in 2 years, okay? A dollar now won't be a dollar in 2 years. It'll be maybe 98 cents, okay? So that's what's called an inflationary currency. So every year, the rate of inflation is around 2 to 3%, okay? Because we continue to print more money. But Bitcoin is a scarce asset. It's scarce. There's only 21 million, and it's harder to get every single year. All right, so we're going to draw a supply and demand curve, okay? And I want to show you what this means, okay? This is basic economics. Supply is going to be right here, and this is demand, okay? Demand. This is going to be quantity demanded, okay? This down here, these numbers are quantity demanded, and this is going to be, let's just say price, okay? Price. So this will be, let's just say, 100. This would be 5, right? Okay, so basic economics says that when demand goes up with less supply, right? Let's say, let's move demand over here. As demand goes up, what happens to price? The price rises, right? The price rises. So let's just move the demand curve over here, okay? Demand goes up, quantity demanded, right? Let's 1, 2, 3, 4, 5. Quantity demanded goes up. This is the equilibrium price, right? Let's just say it's 50. Okay, we're just making random values right here. As demand goes up, so does the price, right? Because quantity demanded is more than the supply, okay? So the price goes up, as you can see. We went from an equilibrium price of 50 to 75. So this is basically why I got into Bitcoin, because it's a scarce asset, okay? It's a scarce asset, and as demand is, further replenishing, which it is, I mean, the news talking about it, world leaders talking about it, even certain countries banning Bitcoin for, just for regulation purposes to, get their foothold in there and then reopen the exchanges. That gives more demand. That gives more people searching, what is Bitcoin? How can I get a part of this? Everyone wants some Bitcoin. How do I get it, right? So as demand goes up, the limited supply stays the same, right? There's a limited supply, so the price goes up. And as you've seen, okay, and I'm going to kind of draw where I think we're at in the cycle, okay? I'm going to draw where we're at in the cycle. Okay, there was people, and this is a, obviously it's a simple cycle, okay? It goes like this, okay? Kind of goes like this, and then it goes like this. All right, and this is for any business. This is for, anything that applies to economics. Right here is where, obviously, Bitcoin, let's just say Bitcoin was at a penny, right? So 0.01, okay? A penny. This is Bitcoin 6,000, where we're at right now, okay? Let's just say 6,000. And this is a Bitcoin, let's just say Bitcoin 500K. 500K, okay? 500,000. I believe we're right here, okay? We're not in this early adopter phase. This is the early adopter phase, okay? Early adopter. Okay, early adopters, innovators. I don't know if that's really the right word. And then this is like maturity, okay? This is maturity. All right, so I believe we're in this phase right here. Because the early adopters are the ones that, made billions or hundreds of millions of dollars, like the Winklevoss twins, right? Because they were in Bitcoin when Bitcoin was a penny, and the risk was very, very high. So the risk levels also apply to this. This is the highest risk, right? People willing to invest their money in something that doesn't really have a foothold in the market, is just kind of an idea circulating, right? This is going to be your medium risk, okay? And this is going to be your low risk mass adoption, okay? We'll just put mass adoption. All right, so you're in a very lucky time right now. You're in a very good place. And, I'm glad to have you here, because this is something that me and you can capitalize on. I've made thousands of dollars so far in the cryptocurrency Bitcoin market. So basically, there's early adopters, which are we missed out on this, okay? We missed out on this, unfortunately, but so does most of the population, right? When if I were to buy Amazon stock back when I graduated high school, you know, I would be multi-millionaire. But that's okay, because we're in this phase where, you know, you're not going to make hundreds of millions just from investing in Bitcoin, right? You can still make hundreds of millions by building a business in this space, but you know, you're not going to make hundreds of millions by just purely buying Bitcoin. That phase is over, okay? But in this phase that we're in right now, you could still make millions of dollars. Okay, there's millions of dollars to be made. And if you're building a crypto brand, which we're going to teach you how in a later module, you can make hundreds of millions, okay? You can make hundreds of millions depending how far you want to take your crypto brand. And then obviously when we get to that maturity stage where it's mass adopted, you know, the market's going to be so saturated, you're not going to really make money off of Bitcoin appreciation. But we won't even talk about that because we're not there yet. We're here. We're here, and this is exciting. So I hope that this video kind of explained a little bit about Bitcoin. I'm trying to think of if there's anything that I left out. Let me take a look at my notes real quick. Oh yeah, I thought this one was good. So Laszlo, his name was Laszlo Heinyak. All right, this guy, he paid 10,000 Bitcoin for a Papa John's pizza. All right, 10,000 Bitcoin. That would be worth millions of dollars for a pizza. Pretty interesting. Just random fact to kind of get you excited about, you know, where Bitcoin's headed. It's really, you know, we could see the Bitcoin price go above 100K, okay? And there's still a lot of room to make money trading that, investing in it, mining, lending, and building a crypto brand around that. So very important to, you know, really absorb this knowledge. And, you know, there are some, let's also touch on the fact that, okay, well, people believe Bitcoin's risky. Can't it be hacked? So there's what's called a Genesis block, okay? And that's basically the first block that was introduced to Bitcoin, and this was introduced by Satoshi. This will be the Genesis block, okay? And this follows a kind of the story of a lot of religious stories, a lot of stories like, you know, Steve Jobs with the first Apple computer. It kind of gives it character. It gives Bitcoin a good story behind it, right? We don't know who the creator is. We don't know who Satoshi Nakamoto is, but he made a societal change by introducing Bitcoin. So, you know, I don't like to think of it in, you know, religious terms or anything like that, obviously, because this is just a digital currency. But, you know, it has a good story behind it, Genesis. So basically, the Genesis block is the first block that was introduced to the blockchain. Now, there is so many blocks that are built upon that, hundreds of billions of blocks of transactions that have already happened, that someone who wants to tamper with the blockchain, with the Bitcoin blockchain, would have to go through all these blocks first to tamper with the Genesis block, okay? The Genesis block is the one that, if it's tampered with, could ruin the whole blockchain, but it's virtually impossible. It's so far back in the blockchain that it would be virtually impossible to reach. So, you know, with people saying, "Oh, well, can't Bitcoin be hacked?" Bitcoin is you know, it can't be tampered with. So I wouldn't worry too much about that. With other currencies, with other cryptocurrencies, maybe so. So that's why, you know, going further into this, stick with Bitcoin right now. We will just be learning about Bitcoin, but I will teach you about altcoins. We will get into that, get into more technical stuff, and but it's going to be exciting. It's going to be exciting. Basically, I'm going to teach you. We're going to go over trading first. Okay, how to trade Bitcoin, trade some of the altcoins. Then we're going to go into some mining, which gets really interesting. Lending, which is very lucrative, and the crypto brand. Okay, and this is for people that actually want to build a business around cryptocurrency, because it's so new that it's very easy to start up a business and start profiting from your crypto brand. So these are going to be all the income sources that we will show you. And you don't have to do all of them. You can do one, you can do two, you can do all. I do all because the more sources of income, the more diverse, right? If this one goes away, then at least I have this and this one, right? So, but we'll show you in the next few modules. But I hope you enjoyed this module. It's definitely a longer overview, but I think that I had explained it pretty well, kind of gave a brief explanation so that hopefully you understand. You could teach people, you could teach your family, your friends, people that you know on the internet. From this video, you can teach now, because you kind of have a good fundamental understanding of what Bitcoin is, what the blockchain is, who introduced it, and kind of the uses of Bitcoin and blockchain. So, I look forward to the next module. Take care.